What is happening right now should seriously concern you. 30,000 roles were eliminated. Entire divisions have been dismantled. This is not because Oracle is collapsing financially. It is because Oracle is panicking. It is spiritedly chasing Microsoft, Amazon, and Google in AI while losing talent, trust, and market ground at the same time. This is not a strategy. This is a company throwing 30,000 people overboard to buy survival time. Here is the full picture they hope stays quiet. 30,000 jobs. That is the number that shattered Oracle's workforce in a matter of days. Engineers, support staff, sales teams, and entire management layers in the United States, India, the UK, and across Europe were all swept out in a wave that reached nearly 1 in 5 employees. The emails landed in inboxes mid-afternoon, often with barely a few hours warning. Some workers learnt their fate in a 20-minute video call, then found their accounts locked before they could say goodbye. Severance, for most, the minimum required by law. For a handful of senior staff, a couple months' salary and a cold promise of transition support. The scale hit every corner of Oracle's business. Cloud and OCAI lost around 8,000. Support and customer service lost 6,500. Sales and marketing lost more than 5,000. Legacy database teams lost 4,000. Even research and development saw over 1,000 roles wiped out. Middle management was not spared either. Nearly 4,000 positions were dissolved to flatten the organization. In India, the layoffs reached 7,500. The US tally tops 9,000. The UK and Europe together lost over 4,000. Asset recovery teams collected tens of thousands of laptops and badges in a single week. LinkedIn feeds exploded with new former Oracle profiles, over 3,500 per day at the peak. In tech hubs like Austin, Hyderabad, and Dublin, the news rippled through local economies overnight. One engineer from Bangalore described the moment. "I got the email at 3:15 p.m. By 3:20 p.m. my laptop was locked. No chance to back up my work. Just a link to severance paperwork." Oracle's leadership called it a strategic realignment. But the reality for thousands was a sudden, irreversible break. The question looms, where did all that money go? And what does Oracle expect to buy with the cost of 30,000 livelihoods? Billions in payroll savings, clawed back from the mass layoff, are now flowing straight into Oracle's AI war chest. The company's procurement disclosures point to an unprecedented shopping spree. Tens of thousands of top-tier NVIDIA H100 GPUs, multi-year hardware contracts, and the rapid build-out of hyperscale data centers across the US, Europe, and India. Internal job postings for AI and machine learning engineers have spiked by over 30% since the cuts, with salary offers climbing to £300,000 for key roles, 10 times what some support staff received as severance. A senior product lead, speaking on background, described the calculus. Every dollar saved on legacy headcount is being redirected to GPU clusters and AI infrastructure. We're not trimming fat, we're gutting entire business lines to fund this. Oracle's own marketing has pivoted overnight. Cloud and database ads have been replaced by campaigns promising the future of enterprise AI and touting the NVIDIA partnership as a game changer. The company's capital expenditure on cloud infrastructure has jumped 15% year over year, with filings confirming billions earmarked for new server farms and GPU racks. But the bet is not just on hardware. Oracle is pouring cash into retraining programs for a smaller, elite group of AI specialists at a cost of £15,000 to £30,000 per engineer. Meanwhile, revenue from legacy database products continues to shrink, down 15% in the last fiscal year. The old Oracle is being stripped for parts, its assets and headcount repurposed to chase a future that remains uncertain. The savings from 30,000 lost jobs are now Oracle's ticket to the AI arms race, and every move is calibrated to close the gap with rivals who have a years-long head start. Oracle's gamble unfolds against a backdrop of relentless competition from the giants of cloud and artificial intelligence. Oracle Cloud Infrastructure, OCI, commands just 2% of the global market, a fraction compared to AWS's 32%. Microsoft, with its Azure and OpenAI alliance, has turned generative AI into a core selling point for the world's largest enterprises. Google's Gemini platform is now woven into its entire cloud stack. Amazon's Bedrock service offers customers a buffet of leading models and instant scalability. Oracle, by contrast, remains an afterthought in most analyst rankings. Its AI tools described as immature, its ecosystem thin, and customer conversion rates stubbornly low. Independent analysts have not minced words. One report from Synergy Research described Oracle as structurally disadvantaged, citing not only its late arrival to the AI party, but also a persistent struggle to attract top-tier engineering talent. LinkedIn hiring data backs this up. While Microsoft and Google boosted their AI headcount by double digits over the past 2 years, Oracle's net talent pool shrank even before the layoffs. OCI's growth rate looks impressive on paper, but from a small base, and the majority of new workloads still flow to AWS or Azure. A senior industry analyst put it bluntly, Oracle's AI pivot may be too late. Customers with mission-critical workloads are not waiting for Oracle to catch up. They are moving to platforms that already deliver proven, scalable AI. Gartner's latest Magic Quadrant placed Oracle's AI services outside the leaders' circle, citing limited model options, slow onboarding, and a lack of developer mindshare. Even with billions poured into NVIDIA GPU clusters and premium AI salaries, Oracle faces a daunting climb. The gap is not just technical, it is reputational. And in the world of enterprise tech, that is the hardest deficit to erase. Oracle's numbers reveal a company under strain. Revenue reached $57.4 billion in fiscal 2025, up 8%. But most of that growth came from cloud, which jumped 27% in the final quarter. Traditional database sales fell 15% over the year, and Oracle's share of the cloud infrastructure market sits at just 3.2%, far behind AWS at 34% and Azure at 21%. The market responded. After peaking at $173.94 in September 2024, Oracle's stock dropped nearly 6% by January 2026, erasing $17 billion in value. Short seller interest climbed to 1.8% of the float, with $2.6 billion in shares sold short as doubts about the AI transition grew. Debt now stands at $23 billion, with $5 billion due for refinancing by 2028. Margins have edged up, but analysts warn that heavy AI hardware spending could squeeze profits before new revenue arrives. As one market analyst notes, Oracle's AI gamble offers growth, but the risk of missing out is higher than ever. In the aftermath of Oracle's sweeping cuts, the fallout stretches far beyond a spreadsheet. Labour market researchers warn of a choke point. Tens of thousands of highly specialised workers now flood an already tight tech job market. Database administrators, cloud support engineers, and mid-level managers, roles once considered stable, now face a glut of applicants for each open position. Labour surveys show that for every Oracle layoff, dozens more with similar skills are already in the queue, pushing interview conversion rates to record lows. For many, especially in the United States and the United Kingdom, visa status adds another layer of pressure. Laid-off workers on H-1B or Tier 2 visas have just 60 days to secure a new sponsor before risking forced departure. As one employment researcher explains, we're seeing a spike in urgent retraining enrolments, people paying £15,000 to £30,000 out of pocket just to stay competitive in AI or cloud roles. Even then, the odds are daunting. The number of applicants per AI job has doubled since January, and only a fraction make it to a final interview. A Bangalore-based engineer, still waiting for callbacks weeks after the layoff, sums up the new reality. There's no safety net. If you're not already an AI specialist, you're invisible. The oversupply of legacy enterprise skills is colliding with shrinking demand, leaving thousands in limbo and raising hard questions about who really benefits from Oracle's gamble. Every stakeholder now faces a crossroads. For investors, the first move is vigilance. Earnings calls and 10Q filings are now the front line for spotting warning signs. Watch for margin compression, debt refinancing, and the true pace of AI revenue. If numbers stall or costs swell, it is a red flag. For enterprise clients, dependency on Oracle Cloud Infrastructure, OCI, should not be taken for granted. Begin a full audit of every mission-critical workload that touches OCI or legacy Oracle products. Map out which applications can be migrated and benchmark their performance and cost against AWS, Azure, and Google Cloud. Many clients are discovering that rivals offer not only more mature AI stacks, but also aggressive migration incentives. Now is the time to gather competing bids and use them as leverage in contract renegotiations. Do not wait for a renewal deadline. Push Oracle for clarity on GPU availability, AI roadmap commitments, and service level guarantees. If answers are vague or pricing is inflexible, escalate your migration assessment. For those locked in by long-term licenses, demand transparency on retraining support and exit assumptions and exit fees. Investors, meanwhile, should monitor short seller activity and analyst downgrades for early signals of trouble. In this environment, inaction is the riskiest strategy. The only way to control exposure is to scrutinize, benchmark, and negotiate before the next wave hits. Right now, 30,000 careers are collateral. Oracle gambles billions on AI, yet holds just 2% of the cloud market, while rivals surge ahead. For investors and clients, blind loyalty is risk. Audit your dependencies, demand transparency, and negotiate hard, because Oracle's panic is your leverage, but only if you act now.